This week's Mortgage Minute with Tatiana. Hello, how are you?
Hey, Tatiana.
Hi guys, I'm good. How are you?
Good. You have good news today?
Actually, yeah, not bad. Yeah, let's talk about it. Let's see. And I don't have a permission to share.
You don't have permission to share.
Shame, Sean.
You know what? Shame.
There.
There you go.
There you do.
All right, let's see. And I'm gonna make it like this. Wait. Okay.
There we go.
Yeah, so I do have good news because, and maybe you can't even see it here, and I apologize, I have a little bit different chart than I typically do. The one that I receive typically today, they actually gonna send it tomorrow. They want to see reaction of the market on, the Federal Reserve and on elections, which, last week rates were going up. The initial reaction after the results on Wednesday, we got increase in the rates, but now, it's going down a little bit. It's, because the Federal Reserve lowered the rate again, which, was kind of anticipated, but at the same time, they were not sure if they're gonna do it. So, and I see the rates are improving slightly. Um, I just want everyone to know that when rates are going up, nobody's talking about it in the media, right? There's no news. When rates start going down, everybody hears about it and they think that, they remember that rates went down to low six or even high fives. So they think that's how they were, and now they're going even more down, but they actually went up all the way to over 7%. So
Yeah.
Yeah.
slowly going down. I think last week we were talking about the rates, it was around 7%. Now it's 6.98. It's just a very slight improvement, but it is improvement. It's nice. Um, so we'll see what happens next. Some have a lot of confidence and hopes for the new the new government. It's hard to tell what's gonna happen. Some still think that rate will go down next year, sometimes next year. It's hard to predict what's gonna happen, but I've been listening to some gurus, and with the new administration, if they're gonna be implementing those sanctions, so
Yeah.
if
Yeah.
they're gonna
The
implement the
tariffs and everything.
sanctions and
Yeah.
China and Iran, whatever they're planning on doing, kicking out immigrants, right? So that's gonna create an inflation, supposed to create inflation when something
Yeah.
like this happens. So inflation equals increase in interest rates. So we'll see what happens.
Okay. So that's kind of what's out there with regards to like how they're expecting the outcome of the election to affect the interest rates. Is they're thinking that it's going to be inflationary, so they're going to cause an increase in interest rates to kind of try to keep that inflation under control.
Right. And and we'll see how soon they'll be able to put all those sanctions in, right? So it's
Yeah.
not an immediate thing. So, but logically thinking, when there are sanctions, there's increase in prices.
Right. Right.
And thus that's inflation. And if piece of bread costs $6 and then it's gonna cost $10, the whole cost of anything is gonna increase, and the same for banks. So they're not gonna lower the rate because then they're gonna be losing even more money. It doesn't make
Right.
sense. And that's the reason why we had increase in interest rates, right? Because we had inflation, they had to stop it. So
Okay.
yeah, we'll see. Hard to tell.
Okay. Well, I have a question for you. Since you've been doing this for a couple of cycles now, since you've been doing this forever, I remember when Trump was president. his first round, he had some pretty significant tariffs on China. We had a business that really like it upped our cost quite a bit. But if I remember correctly, there wasn't an increase in inflation as far as in the economy. Do you remember if the rates were higher? I know that that COVID typically, caused a artificial suppression of rates, but pre-COVID, were the rates higher and ticking up with him in that previous term, or what do you remember from that
So
time
I
frame?
remember that when he actually got elected, the rates jumped. Like the initial reaction was the rates jumped the whole percentage point. And I remember they were in 4,
Okay.
and then they jumped to 5. So
Okay.
that's where the rates were. But then, they went down slowly back to where they were after that initial jump. So, and then, so what year was that? 2016, right?
Yeah.
Yeah.
And the rates were, and we can actually pull up the data, right? So can you see the whole thing here?
Yeah.
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 Okay, perfect. Yeah, so let's see. So right here we have 2016,
Okay.
and you can see here the rates were going up. 17,
Mm.
18, they went slightly down in 19, and then at the
And
end
then COVID.
the COVID hit 20, 21. So those were golden year,
Yeah.
and
Yeah.
the rates were really low. And after that, they just start going back up. And these slow rates, they did create the inflation basically, right? So
Yeah. Yeah.
that's why the rates jumped up here, which are pretty, in line where they were before. They're not any higher than back in this,
In
even
normal years.
starting normal years, even starting
Yeah.
from 93 to 2007. And then they start dropping with the crash. Yeah, so
Yeah.
yeah, they
Okay.
did go up some, and
Yeah.
Mhm.
Yeah.
get maybe even better data somewhere, but I would just have to look it up for exact rates. Oh, but hold on, we
Yeah.
have them right here, right? So 2016 we had 3.625, then 24, 4.5, back to 4, 3, or like this.
Perfect.
Yeah.
Okay.
Yeah, so they were going up and down a
Okay.
little bit.
Okay.
Yeah.
All right. So basically, based on his history, it might be a good idea for people not to be waiting around for a rate cut, which we say that all the time anyway.
Yeah.
But it might be something, especially since prices typically go up after an election, to go ahead and really get a loan now, get locked in, get the property, and then if rates do happen to come down, they can always refinance. But it might be a good idea to go ahead and take action now versus waiting.
So are you saying, are you telling people to lock now?
Um, for immediate, like within this few days, I would
Yeah.
just tell them to float.
Okay.
Okay.
Just because it's, the market is doing pretty good. But it's,
Mhm.
I look at it as a hawk, check that all the time. I'm on it. And if I see movements to wrong direction, then I would be just, asking them to lock in.
Okay.
Okay.
Gotcha. Okay.
And you did bring up a really good point about people only hearing about the rates going down. Because I've even heard that from a couple of people. They're like, oh, the rates went down. And then they see what the rates are and they're like, but wait, I thought the rates went down. These are higher. And it's like, no.
Yeah.
They weren't watching them go up. It was
Yeah.
just the going down. So I'm
weren't-
glad you made that point.
I
They
mean,
weren't
it's
watching the weekly mortgage minute.
exactly, yeah, they should. But it's normal that people don't really pay attention to that in their everyday life. They
Yeah.
know about it when they hear about it.
Mhm.
Yeah.
On,
Yeah.
large social media platforms and media.
Yeah.
But in everyday life, if they don't hear about it, if nobody's gonna advertise that rates are going down up, right?
Right.
Oh,
Yeah.
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 They miss the whole middle. They just know what happened here and here, but they don't know where they're at. So yeah,
Yeah. Yep.
Yeah,
that's how
very
it
good.
is.
Okay. All right. Well, thank you. We appreciate it, and we'll just have to watch and see and lean on your expertise as we go through this process.
That's right.
Yes, and on yours too. And yeah, I encourage everyone to watch your videos because you're doing a great job, better than all those news. And just keep an eye on our videos. I think they're pretty
Yeah.
educational. Yeah.
Channels. I think that's what the truth is.
People want to do videos with us, and I'm like, you might want to watch my videos first because
And they need to subscribe too. Please.
That's right. All right. Yeah. We'll see you next week.
Okay, see you guys.
Bye.
Bye.
bye.